Today is July 5th, and this is a USD Canada backtesting session and trade recap. We're going to start with the backtesting session, and then we will get into the trade recap after this. This is the first backtested trade. This trade has a swing high, second swing high. Price comes down, retraces back into this previous swing high on a lower time frame. Once a break of structure is apparent, this would be a trade to short with a stop loss above here. Take profits, one at 1-to-1, one at this area of liquidity right here. Although it could even be as far as anywhere from here to here. This would be too much because it's 1-to-4 for the second take profit. So this would be the most reasonable price range. And then one all the way down here at 1 to 6.5. And this would likely be 50, 25%, 25%. On the second trade, a second swing low is also found. Price comes down and retraces. The equilibrium stretches from this swing high to this swing low. As soon as a break of structure occurs within the order block, this trade would enter for a long with one take profit at approximately 1-to-1, a second take profit up here, and a third take profit up here, which would be 3.55 and 5.4 respectively. Again, a 50, 75, 70, or 50, 25, 25 trade. Swing low, setting a swing low for this trade. Price comes up, retracement. A break of structure was found on a smaller time frame. That leads to an entrance with a 1-to-1, 1 to 2.04, 1 to 2.5, with areas of liquidity here and an area of liquidity here and an area of liquidity here. Sorry. Those would be 1-to-1, 1.2, and 1.2.5 respectively. Swing low here. Second swing low. Price comes out right here with a retracement here. As soon as price breaks structure, enter. The first take profit would be 2.1 to 2.32. Second would be 1 to 3.56. Third would be 1 to 5.91. And fourth would be all the way at 1 to 12.26. This trade would be likely a 50, 15, 15, 10 is how I would divide the position on this, given how risky this trade would be. That it could stretch as far as anywhere from 1 to 12 or 12-to-1 risk to reward ratio to 16-to-1 risk to reward ratio. Here's swing high, second swing high, retracement right here, break of structure, entry, first take profit at 1-to-1, second at 2-to-1 at the bottom of this liquidity sweep here. That would be a 50-50 trade most likely. This trade, swing high, price comes down, second swing high, price retraces, forms equilibrium, break of structure was found on a smaller time frame, entrance with 1 to 1.17 for the first take profit and 1 to 2.88 for the second take profit. Third, a swing low was formed. A second swing low was formed with an order block. Price comes up, retracement. As soon as price breaks structure on a smaller time frame, which was found right here. A 1-to-1 trade with 50% of the investment would be set here. A 1 to 1.6 with the take profit at the top of equilibrium, and a 1 to 1.282 with take profit at this area of liquidity right here. This would be a 50, 25, 25. This trade is very similar, swing high, low, another swing high, takes out the previous swing high, low, retracement into this order block and equilibrium. This one, a break of structure was not found until after equilibrium, but still within the order block. Here, this would be a 1-to-1 for the first take profit. The second would be 1 to 1.44. The third would be 1.194. Here, swing low, second swing low, price comes up, retracement as soon as a break of structure is found. 1 to 1.1 at the top of equilibrium. 1 here at this area, 1 here at this area, and 1 here all the way up here. And this one could stretch as far as up here, and this would be a 50, 20, 50, 15, 15, 10, with 1 as high as 6.4%. This one has 1 swing low here, second swing low taking out the previous one with a swing high here, swing low here to form equilibrium. As soon as price breaks out of equilibrium, as soon as price breaks out right here, 1 to 1.82, first take profit up here, second over at this area of liquidity, third at this area of liquidity. And that would be that'd be a similar 50, 25, 25. This trade here, sorry, I'll be right back. Okay, for the trade recap. First, this trade was close to a 3-to-1 risk-to-reward ratio trade, risking 0.5% on my account, and this trade unfortunately hit stop loss because of some crucial errors with the trade. First of all, this trade went from, I observed a swing low here, swing high, and then a swing low exceeding the previous swing, a swing low exceeding the previous one right here. And then as soon as price formed this order block and formed equilibrium and retraced here, as soon as there was a break of structure, I longed this trade. I set my stop loss below here and my take profit probably all the way up here for a 3-to-1 RR trade. There were some crucial issues with this trade. Number one is that I traded during news. There was FOMC that came out 45 minutes after the trade, and I believe that it was irrelevant because the trade would either hit stop loss or take profit before FOMC came out. That was a crucial error, and I neglected the fact that news is too risky to trade for beginners, regardless of what time of day it is. The second was that the entry was not ideal. The entry here was out of equilibrium and it was out of the order block on this candle right here. I felt like a fear of missing out on this trade and that it was going to go up to the moon. When in reality, if I were to do this trade over again and I had to long the trade, I should have entered here. I should have waited for price to retrace and break structure to the upside right here. This would have been a more optimal entry. I could have gotten probably a 1 to 1.2, 1.3 risk to reward ratio trade with previous area of liquidity up here. Yeah, almost 2-to-1. The third error with this trade was that, shoot, the third error with this trade is that it is clearly neglecting daily bias. Price is clearly bullish, and I tried to take a trade off of a retracement when that clearly doesn't work. What I need to do instead is I need to look at the overall trend, which right now is it was in a very stark downtrend, especially because of this pump and dump right here. So I cannot possibly be trading on this downtrend now that price is in an uptrend. Now I may consider taking a buy, but this was an idiot trade because of the trend. So another thing that I could have done is, I guess that's pretty much everything. In other words, I would just have to first check daily buys of the day, the 4 hour and the 1 hour and the 15 minute before I start taking a trade. And I only use 1 minute for the entry. That way I won't be swimming against the tide. Second, I'll check Forex Factory before I get on the market, so I will know exactly what day news will be coming out, so I won't take a trade and then find out there's news. The third thing that I'll likely do is I will refine my entry to include the fact that I can't just wick in and then break a structure out. I have to take a trade when price is in both equilibrium a and an order block. However, this trade was a 3-to-1 RR trade. I hit both swing lows, and in terms of its structure, it still resembled what would later come up a fair amount of pips. I don't exactly know the right number, but this trade did come up. So and this was a 3-to-1 RR trade, so I'd really only have to make a small percentage of these trades actually hit in order to be consistently profitable. So what I'm gonna do is number one, start taking trades with ideally a 2-to-1 RR trade where I'm not selling myself short, but at the same time, I'm not getting excessively risky, like all the way up here. The second thing I'll do is wait and be more disciplined in terms of the entry. And third, checking daily bias and Forex Factory before I get into like the structure of the market. So that is it for today, and thank you for watching.